It started with a single envelope sliding across an IRS auditor's metal desk at sunrise. Inside was a fresh data dump from Meghan and Harry's Archewell Foundation, number so baffling they forced the agency to pry open a case everyone thought was closed. Less than a year ago, the California Attorney General slapped a bright red delinquent sticker on Archewell after a routine fee and Form 990 went missing. The Sussexes team blamed a lost check, mailed a replacement, and claimed victory when the state cleared them 6 days later. Yet behind the scenes, that delinquency notice pinged the IRS's automatic monitoring system, planting the first seed of doubt in Washington. Compliance analysts hunting for patterns soon spotted something stranger, a canyon-sized gap in Archewell's 2022 numbers. Donations crashed from roughly $13 million in 2021 to barely $2 million a year later, an $11 million freefall that set social media ablaze with missing millions memes. Headlines screamed, "Where did the cash go?" as bloggers tallied line items that didn't quite line up. The Hindustan Times even quoted tax attorneys branding the books incompetent at best. Each article landed like a jolt of caffeine on the IRS desk, because when a charity's revenue nosedives faster than its spending, examiners smell smoke. But here's the real jaw-dropper. The Sussexes themselves logged just 1 hour per week of work for their own nonprofit that year, according to prior filings. Outsiders wondered how a globe-trotting duo juggling Netflix deals and book tours could possibly keep tabs on millions flowing in and out with 60 short minutes. Inside IRS corridors, auditors pieced together a timeline. First, the lost check fiasco raised a flag. Next, the donation cliff triggered a second alert. A pattern was forming. Too many near misses, too much hazy math, and a public narrative that shifted by the month. Yet even skeptics weren't prepared for what the 2023 return would uncover, because the paperwork Meghan and Harry finally dropped in December 2024 hit a brand new bombshell wrapped in bland accountant prose. Buried on page 14 of that 2023 form, 990 was a 6-digit figure that forced seasoned auditors to grab highlighters in disbelief. Archewell reported a $4 million incoming contribution that never showed up in outgoing grants. Salaries and consultant fees, meanwhile, leaped by 60%, a spike tough to explain when donations were supposedly plummeting. Charity Watch analysts paused a pending rating, saying they needed clean data before passing judgment. Reporters dug deeper and found that the biggest single outflow, $250,000, went to an unexpected address in Philadelphia, a wellness nonprofit run by Ashley Biden, the president's daughter. The amount looked generous until watchdogs noticed something odd. Ashley Biden's own tax return didn't list the grant at all. Within weeks, the National Legal and Policy Center filed a blistering IRS complaint, accusing both charities of serious reporting violations and hinting at political favoritism. Cable news lit up with split screens of the Sussexes and White House photos, asking whether Star Power had blurred nonprofit lines. Behind the cameras, IRS agents activated Phase 2 of their probe, cross-matching bank transfers, subpoenaing emails, and interviewing former staffers who claimed invoices were massaged to fit narrative goals. Forensic accountants whispered that if any personal benefit flowed back to the Sussex household, excise taxes could hit both boards. And that leads to Meghan's hidden headache. She remains a U.S. citizen, which means every Netflix paycheck, Spotify royalty, and Penguin Random House advance, no matter where it's earned, feeds straight into the IRS matrix. Dual filing errors can stack penalties faster than paparazzi flashes. Experts estimate the couple's combined tax exposure could exceed 7 figures if foreign tax credits were misapplied. Observers also flagged a web of Delaware-based LLCs tied to the Sussex media empire, entities perfectly legal yet often used to funnel royalty streams and consulting fees. If even a sliver of charitable income drifted into those private vehicles, the IRS could argue an excess benefit transaction, slapping Archewell with fines up to 25% of each dollar deemed improper. So what can the IRS really do to a royal-adjacent charity? The answer arrived in a confidential memo leaked last month, and its toolkit is far sharper than critics ever imagined. A single sentence in that memo reads like thunder. Revocation of exempt status remains on the table if corrective action is not taken within 2 consecutive filing periods. Translation: if Archewell's 2024 Form 990 due November 15, 2025 after extensions, shows any repeat discrepancies, the IRS can strip its 501c3 shield. Without that shield, every donation becomes taxable income, and past donors could demand refunds, creating a financial spiral no young nonprofit survives. The agency's next step is a notice of deficiency, essentially a bill listing each questionable line item plus potential fines. $10,000 to $20,000 per missing schedule, multiplied by each year under review. Board members, including Meghan and Harry, could be held personally liable for excise taxes if the IRS proves they approved excess benefit deals. PR strategists warn the optics alone are lethal. Corporate donors crave clean reputations. A whiff of IRS trouble sends them running. Buckingham Palace remains publicly silent, yet insiders murmur that King Charles worries the saga drags the monarchy into another cash-for-access storm at the worst possible moment. Meanwhile, YouTube commentators dissect every update. Hashtags like #Archewell audit trend, and late-night hosts joke that even the taxman binge-watch Suits to understand Meghan's royalty checks. Each punchline chips away at the Sussex brand, once marketed as modern, transparent, and service-driven. Privately, Archewell staff scramble to hire new accountants, launch an internal review, and promise enhanced governance. Insiders confess morale is shaky. Every Slack ping could be another lawyer hunting spreadsheets. Yet amid the chaos, donors and fans ask a simpler question. If the Sussexes preach openness, why did so many numbers hide in plain sight? Transparency isn't just paperwork, it's trust, and trust, once cracked, rarely heals completely. So where does this roller coaster screech to a halt? The clock ticks toward November 15, 2025, the IRS sharpens its pencils, and Meghan and Harry face a choice: reveal every cent or risk losing everything their charity stands for. One thing is certain, the story isn't over, and the next chapter may be the most explosive yet. But wait, there's a subplot almost no one saw coming. Financial sleuths unearthed a dormant Wyoming LLC, registered months before the Sussexes left Britain, that suddenly roared back to life in mid-2023. The LLC's purpose? Officially media consulting, though its listed address is a mail drop miles from any studio. Speculation swirls that royalty payments from international editions of Harry's memoir Spare may have passed through the shell before landing in Archewell's own accounts. If true, auditors could argue that charitable branding was used to slash taxes on commercial income. Even more eyebrow-raising, a whistleblower claims Archewell spent over $150,000 on storytelling workshops at a Malibu retreat where attendees sipped imported matcha and brainstormed impact narratives. The invoice labeled the getaway as program services instead of overhead, a distinction that changes how watchdogs rate administrative efficiency. One former attendee calls it a spiritual TED Talk with sea views, not a charitable field project. And it doesn't stop there. Security bills paid to a private London-based firm reportedly ballooned by 80% after the couple's pap-ridden New York car chase incident. Critics note the charity footed the invoice, rather than the Sussexes' personal LLCs, raising fresh questions about private benefit. Archewell's spokesperson insists the protection was necessary to safeguard humanitarian work, yet the IRS may ask why donors, not Netflix royalties, covered armored SUVs. Across the Atlantic, members of Parliament quietly brief HM Revenue and Customs about potential overlap between UK gift aid claims and US charitable deductions. Double-dipping, even by accident, can trigger clawbacks on both sides of the ocean. Tory backbenchers relish the chance to grill Treasury officials on tax advantages enjoyed by runaway royals, all while front-page tabloids cheer them on. Royal watchers add fuel by dredging up a decade-old precedent. Kids Company, a beloved UK charity, shut down after regulators questioned lavish salaries and fuzzy record-keeping. The parallel? Both outfits basked in celebrity glow until accountants pulled out calculators. Those grim headlines still haunt British donors, making them extra skittish about Archewell's glossy photo ops. Meanwhile, advisory firms in Silicon Valley whisper that Meghan considered renouncing U.S. citizenship in 2022 to dodge complex, worldwide income rules. Lawyers allegedly warned her the move could trigger an exit tax on unrealized gains, potentially costing tens of millions. In the end, she stayed American, but the rumor alone spotlights how thorny her tax maze remains. Hollywood publicists track yet another metric: brand partnerships quietly expiring. A sustainable coffee startup, once emblazoned across Meghan's Instagram, vanished from her feed after investors demanded harder proof of impact. Insiders suspect corporate legal teams drafted reputational risk clauses allowing them to bail if the IRS probe turns formal. For every lost sponsor, Archewell must find fresh dollars or slash programs, exactly what auditors watch for when judging fiscal health. And then there's the Netflix elephant in the room. Contract insiders assert the Sussex docuseries earned bonuses pegged to view-hour milestones. If those bonuses flowed while Archewell's books were still under review, the IRS can subpoena deal memos to confirm whether any production costs were wrongly booked as charitable awareness campaigns. Entertainment lawyers call it a paperwork nightmare because the line between advocacy and content marketing blurs fast in streaming land. Even the couple's Montecito neighbors feel ripple effects. Realtors whisper property values, wobble each time news breaks of potential tax liens. One luxury home broker joked, "A royal audit isn't exactly a selling point when you're asking $40 million for ocean views." The quip went viral, nudging local councils to mull tourism levies to offset any publicity damage. Back in Washington, freshly appointed IRS Commissioner Amelia Thompson vows publicly that celebrity status plays no role in compliance decisions. Staff morale reportedly soared at the declaration, with junior examiners joking they'd soon know more about royal spending habits than palace courtiers ever did. At the same time, congressional budget hawks eye Archewell's saga as ammunition to beef up nonprofit enforcement. A draft bill proposes doubling penalties for late filings by charities topping $5 million in revenue. Meghan and Harry's headline-grabbing numbers provide the perfect case study to win votes, meaning their ordeal could reshape rules for every large charity in America. Yet despite the storm, loyal fans rally. Social feeds fill with hashtags #StandWithArchewell, sharing snapshots of children's playgrounds and freshwater wells allegedly funded by Sussex grants. Supporters argue bureaucratic nitpicking shouldn't overshadow real-world impact, insisting the foundation's mistakes are fixable paperwork, not moral failings. Detractors clap back that good deeds don't excuse bad math. They point to a leaked internal memo where an accountant pleaded for more than 48 hours to finish year-end close, claiming burnout after being the low number cruncher for global programs. If resources were that thin, critics say, transparency was doomed from the start. Through it all, Meghan's podcast hiatus fuels gossip. Was the break creative, or a strategic silence while lawyers comb statements for audit landmines? Spotify's exit left millions on the table, money some believe was earmarked to refill dwindling grant budgets. Losing that cushion tightens the noose around Archewell's filing deadlines. Even seemingly minor details grow ominous.